Hey everyone, in today's video, let's review some of the major failures this year. They were either crypto exchanges or major crypto projects. They were the major bankruptcies of 2022. Let's review once again why each one failed. Let's start off with Celsius, which is right now going through bankruptcy proceedings. Now, ultimately, the reason they failed is that they did not have our assets backed one-to-one. And because they were working so hard to give the best yield to users to try and take users from other platforms, Celsius had to take on increasingly bad bets to pay the unsustainable yields. They were using decentralized lending protocols and aggregators, juggling around client funds for the best return. Some of their fatal errors include not charging any withdrawal fees for users and not lowering interest yields when crypto winter came. And when crypto winter came, they got destroyed. Cell token was also nothing more than an ERC20 token that was used as a loyalty token for discount on loans and others. Celsius also used promo codes with the promise of free crypto to attract users over from other platforms. But these were promises that they could never keep once everything unraveled. Celsius did not have its own blockchain, and at the end of the day, despite being a very promising project, the CEO, Alex Mashinsky, ultimately resigned. Now, Voyager Digital, a bigger disappointment, especially coming from a seasoned CEO like Steven Ehrlich, the former CEO of E-Trade Financial, a publicly traded company. Ultimately, Voyager Digital tried to act like a bank and made a fatal unsecured loan to Three Arrows Capital, which in my eyes was the worst business move of 2022. They also tried to generate unsustainable yield on their platform to attract users off of other platforms, which caused them to make risky bets and leverage plays. Although Three Arrows Capital was a very well-respected crypto hedge fund at the time before the loan was made, Voyager Digital, which was also a Canadian publicly traded company at the time, never recovered from its unsecured loan to 3AC. So this completely killed user confidence and even publicly traded crypto stocks, all driven by the collapse of the Luna blockchain. To be fair, Do Kwon was a visionary, and some of the products as a result of the Luna ecosystem like Chai Payment Network and Alice.Finance did have a lot of potential. Luna was also its own blockchain that was built using the Cosmos SDK, which meant that you could freely transfer between Luna blockchain, Chronos blockchain, and BNB blockchain, all sister companies of the Cosmos network. But Do Kwon also had a major Achilles heel problem. This guy was cocky, thinking he built something that was indestructible. Once UST depegged, the market turned on crypto and Luna, and everyone ultimately got wiped out. At the end of the day, like it or not, Luna worked exactly the way it claimed it would. But now, FTX and Sam Bankman-Fried, this is just a completely different animal. This is like the Enron of the crypto industry. It appeared they commingled customer funds and used it as their own for things like political donations. And it appears they even purposely falsified accounting records to mislead investors and auditors. Everyone was fooled. They called him the Warren Buffett of the crypto industry, but really it was a bunch of college engineering friends who got together to make money. The engineer mentality of go fast and break things. VCs love this guy, and not even regular VCs. Alfred Lin of Sequoia Capital invested in this. This was a guy that had the Midas touch. They even attracted celebrities from the likes of Stephen Curry and Tom Brady. Even major crypto influencers all endorsed FTX, but ultimately it all collapsed like a house of cards. Finally, let's talk about BlockFi. BlockFi at one point was named the fastest growing private company on the INC 5000 magazine. They wanted to create a lending platform where cryptocurrencies could be used as collateral for things such as loans and give users a simple way to earn interest on their crypto. They even partnered with Visa to create one of the first in-class BlockFi crypto Visa cards with unlimited 1.5% cashback in Bitcoin. But just like other major crypto CEFI platforms, they have also announced bankruptcy. You see, when Luna collapsed, 3AC collapsed, and BlockFi had significant exposure to 3AC. They would not have survived if they had not been rescued by their White Knight, SBF, and FTX to the tune of a $400 million line of credit from FTX. Well, it turned out that that White Knight wasn't much of a White Knight, when FTX themselves turned out to be a gigantic fraud that was built on the back of the FTT token. When FTX and Alameda Research defaulted on $680 million of collateralized loan obligations, BlockFi went down with it. Another disappointment because the company was looking to go public within the next year and a half. But because crypto is so intertwined, there was a domino effect of another collapse. But ultimately, why did each one fail? Well, they simply took on too much risk. Celsius and Voyager Digital, why did they take on so much risk? They wanted to attract more users and be the leading platform. In order to incentivize users to switch over from other platforms, they had to give yields or promises that were unsustainable and ultimately led to their collapse. Like if Voyager Digital or Celsius simply operated a simple business model without utilizing leverage, overextend on loans, or even promise its users unsustainable yields, they would have survived. Yes, the collapse of Luna is what ultimately triggered everything, but if the collapse of one crypto causes the collapse of your entire company, then you never had really good risk management in place. FTX and SBF, ultimately I feel it came down to this: lack of regulatory oversight, lack of compliance, too much trust and faith. These guys needed accountants and audited financial statements to set them straight. They never had that. So why do I believe that Crypto.com is not like the other companies that ultimately failed? So number one is they already did all the hard work 5 years ago when they started in 2016. They benefited tremendously from the 2021 crypto bull run, scaling from 10 million to 50 million and then 70 million users in a span of just over 2 years. They were just the company that was the most ready with their Crypto.com debit Visa cards, having the biggest digital asset alliance with Visa. Now, in order for them to drive all this growth, they hired Henrik Johansson, the former head of growth at Spotify, another famous tech company. This isn't some random 20-year-old executive, but one of the most experienced growth experts in the space. More users equals more fees equals sustainability. Number two is compliance. A lot of people don't know this, but Crypto.com was the first cryptocurrency platform to achieve SOC 2 compliance back in 2021. This was an audit done by Deloitte, one of the top Big 4 audit firms in the world, and not some small no-name metaverse audit firm like the auditors of FTX. To comply with SOC 2, Crypto.com demonstrated it had established rigorous policies and procedures in accordance with the AICPA Trust Services criteria, and SOC 2 verifies the existence of internal controls which have been designed and implemented to meet the requirements for the security principles. In addition, they are right now undergoing an audit right now to release the full proof of reserves. Everything that I've seen so far about Crypto.com points to a company that is serious about compliance. Also, take a look at the Chief Compliance Officer of Crypto.com. This is a former Visa and Coinbase executive. He used to run anti-money laundering initiatives at these places. If you scroll down and do some research on some of the other executive team members, they all come from legitimate tech companies or big name brands. These aren't some 20-year-olds running degen strategies with your money. And number three is the use of Crow. Crow isn't being used for collateral like FTT token. There's a cap supply of 30 billion, and ultimately, even if everyone tried to short Crow, it wouldn't collapse Crypto.com. The one thing you need to understand about companies that have been around longer like Coinbase, Crypto.com, and Binance, they don't need to make such risky leverage bets to attract users. They are much more further along in terms of the company scale. These are much more mature companies as opposed to startup companies. So why does Crypto.com not need to take on so much risk? Well, they're already one of the market leaders with 70 million users, on track to hit 100 million users by the end of 2023, and they are profitable. What is the purpose for them to take on such risky bets? You have a proven business model. Just take a fee every time someone buys or sells. You have a loyal fan base, you're the largest digital crypto Visa partner of Visa, and you have licenses that let you be compliant with major countries and jurisdictions. All you need to do is keep running your business, which is a proven business model. Stay compliant and back your users' assets one-to-one. You don't need to do leverage or decentralized strategies to generate yield. If you just manage risk effectively, then you ultimately win. This is why I feel Crypto.com ultimately will survive. But before I continue, I just want to say that I'm just a regular fan of the product. Crypto.com is not paying me. I have no insider information. I just overall like the product and the mission statement. But I know the real question on everyone's mind is Binance, the largest crypto exchange, trying to go after Crypto.com? Is CZ and Binance starting to get scared of Crypto.com? I will answer those questions in my next video. But just remember one final thing about exchanges, especially other exchanges. I told everyone this before, but other exchanges, the growth is not as rapid, not even close in traffic. It's time to close the casket like Kane Undertaker matches. Take the matches, they burn like crow. Where do I stash it? Under my bed? Now there's flames on my mattress, and a same amount of ashes. A crow circling my address. I see white and black like Citizen Kane the classic. But I can explain the entire thing without color graphics. Just look at the exchange hiring talent the fastest, and don't miss out. This ain't an Allen Iverson practice.